Hey guys, I'm going to do the recap for today. I do apologize for yesterday and today. I couldn't trade at the open. I had some guests, so I really couldn't sleep, early enough to wake up, and so I do apologize for missing two open. Today I came to see what's going on in the market. I know it was a really nice open with Baba gapping up. There was a lot of opportunity. I know a lot of traders are traded open, Thor and everyone else, and it was a really good day apparently for Baba. It was a really nice opening range breakup, but I just missed trading open, and I came to see what's going on. Take a look at the AMC, and I realized that AMC is really selling off really bad at the open. I came to the office around 1 p.m. Eastern time, and I decided to take a reversal on that, and I lost money on it really bad. And the reason for that was just because I traded something that I didn't have trade book on that, and unfortunately this is something that I wanted to mention, that when you have a trade book, it means that you have to define entry and exit rules. You should take that trade. But trading just because something is going down and you want to take a reversal, what you want is irrelevant. I want to do a lot of things, but that doesn't mean that I should just take action based on that. You have to have the criteria. So AMC was selling up, and we have these booty reversals that the criteria to entry is when the moving averages are crossing over. The three moving averages, 9, 20, and 50, are crossing over on a 1 minute chart, plus a 15-minute high, and plus a 5-minute new high. And I started taking this trade, and it didn't have any of the criteria that I wanted, and as you see, I just lost really bad on it, and just I hate so I just lost money on it. And I still have a little bit of ARC and TNA going with this AMC. Really, just I try to did a couple of trades on it that I didn't have the criteria for my entry and exit, and unfortunately I lost money on it. So and I have to pay the price for it. And I specifically want to take this recap to show you that how you can lose your money when you are trading so that's Q. Let's do this AMC. Yeah, so AMC, as you see on a 15-minute chart, it was really selling off. The criteria for entry for this kind of reversals is first a 15-minute high, 5-minute high, and the crossover of the moving averages like 9, 20, and 50. And I really didn't have the criteria that I was expecting to, and as you see, I had to pay the price for it. Let's bring the epic pen here as well. And yeah, so that's where's my epic pen? Right here. And so the criteria for this is I was it was really holding this level. I saw that it's really holding this level. I took it long, popped up a little bit, came down, hold this level again. Well, that was my initial stop loss, but I got and really never could broke this moving average, and I got stopped out. Came back up, and I said, oh no, this is the time that it goes. While it really didn't have any criteria for me, it just did pop a new 5-minute high, but on a 15-minute chart was this one actually was better. The second one, we did make a new 15-minute high. So as you see, I went long, popped up a little bit, and I made some profit on it. It scaled out, and I came and I got stopped out on the rest on the break-even point. So at least one trade was really good. So at least this trade was really nice. That was a trade that was based on my trade book, new 15-minute high. Even though the 1 and the 9 and 20 didn't cross over, but at least we had a new 15-minute high. Came down and it popped back up. I went long again for no reason. I had no criteria for going in there, just based on gut feeling, and I got stopped out again. And that's the third trade that I did. So that's the first trade, and that's the second trade. Second trade workout. That's the third trade. And as you see, it really didn't. I shouldn't really go back in there. It did came back up to. So as you see, sold off really another point or so, which is a lot. It did pop up so heavily, and it did. Popped up about the 20, but it really didn't do this nice crossover of the moving averages. And I did took it one more time, and again I got stopped out on it really bad. It did make a new 15-minute high. Where was it? It did make a new 15-minute high. So this would have been probably a trade that I should have taken, the crossover of these moving averages, because it did, coincide with the new 15-minute high and new 15-minute low. Although it didn't really couldn't make through this, but this I added where I got a stop out on it. So from this trade, this was okay. I mean, potentially at 230, yeah, we need a new 15-minute high, 5-minute high, and at 230 we did also have this 15-minute high. So this potentially could have been another trade that it didn't work out, but this pop was way too fast, and I got stopped out on it. So this reversals in the afternoon, it's really not my thing. I'm not really good at them, and it really didn't fit my criteria. I kind of messed up my whole day, not the whole day, but the whole mindset. Eventually it did pop up, but it really didn't do a nice clean bounce on this. So the lesson that I wanted to mention is that you know, you don't take the trade based on what you think. You take the trade based on what your trade book dictates that, and that's what we are trying to emphasize in this community. That you know, you define a new trade book for yourself. You know, with the clear entry signals, entry indicators, and then you exit, and of course the risk management criteria. Just something that AMC is selling off and it's at the level doesn't necessarily mean, at least for me, I should take that trade. I need the 15-minute high to show the strength, and I need the crossover of 1 minute chart of 9, 20, and 50 moving averages. It wasn't there, and as you see, I had to accept a very, very heavy loss on it, and just every time, you know, $2,000 loss, $2,000, $3,000 loss, just eventually adds up, and that really defines the definition of an overtrading, and this is something that you got to be really, really careful not into that. And I say, you know what, after that, I just let it go. You know, it's just not the stock that I want to take a reversal on that, and I accept the loss. So what to blame? Of course, my first trade, you know, just getting out a little bit too early and had no strength on it, and really didn't give us a very clear that pattern. Even, you know, the only trade that really worked and it did fit my criteria was this one, and it did actually popped up a little bit. Really never get the follow through, but it nearly get that. I think this one would have also worked only if this squeeze wouldn't happen like that. This is squeeze, what you want on the crossovers are that they all crossover at one point. This happened so fast that it took a little bit of time to 50 moving average to come and crossover. But anyway, it's just a trade that I really shouldn't have trading, and I paid the price for it. Well, thank you for watching, and tonight is Dr. Reed presentation at 8 p.m. So hopefully see you soon, guys, for that. Have a good day.